Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, hit that like button, and share these videos with your friends. For many weeks, I've been telling you folks that we were going to have one of those oh shit moments. Well, we had one today. Crude oil went to a negative $40 at one stage. You're listening to an old commodity trader. I've been involved in all kinds of transactions from financial to agricultural product. And I can tell you what you saw today was somebody waiting for the last minute to deliver on a contract. They found out there was no one to deliver to. They couldn't give the crude oil away. What does that mean, actually? What does a negative $40 mean? That just means this contract delivery process completely blew up. I have no idea what kind of stories we'll hear as the days and months unfold, but this was a huge event. This was a failure of the delivery process. I have several contacts across the country and some in the oil patches. 2 weeks ago, I was told that there was no real spot market for crude oil. It wasn't $20. In some cases, crude oil was going for $6 and $4 in areas in Texas just so they could get money. So this has been going on behind the scenes for a while. I've also been telling you that crude oil has it right. Crude oil told you today what type of demand there is for energy products. We know there's storage issues. We know all kinds of things about crude oil, but one thing for sure we know, there is nearly zero demand. And when there's no demand for something in a commodity world, it becomes free. Now, I made a comment last night, which is ironic. When I reviewed the crude oil chart, I said, this thing looks like it's going to zero. I was sort of joking. I thought maybe it could go to $10, but it went to $7.80 and then it collapsed to a negative 40. It doesn't mean that crude oil is negative 40 and people will pay you to come and pick up their crude oil. What it means is that this delivery process failed. So what does all this mean actually? What it means is the economy is falling apart. We're seeing that oh shit moment like I didn't think that could happen. Remember, crude oil is the single largest commodity traded on the planet. I don't want to talk about any conspiracy theory of what I think's going on. Maybe that'll be appropriate. I'll think that one through before I put it out there. But there's definitely a lot of players that want to see this happen. This is not happening by accident. Part of it is due to the shutdown of the economy. The other part is what we've seen through Russia and Saudi Arabia. So these are huge events. These are things we're going to see more of. And one of the things that you can't do with oil wells, if you go to Google and go to Abilene, Texas, and zoom out and then start to zoom in, all those little specks that you see between I-20 and I-10 are all oil wells. And you can't just go, there's not a switch. You go, okay, we don't want to pump any more oil. You just turn it off and click a switch and then come back 6 months, turn it back on. It doesn't work that way. These wells have to be plugged and capped properly because there's all kinds of pressure issues and things that have to be maintained. They just don't turn off. And so let's say you were lucky enough to get somebody to store your oil in an offshore, like in a tanker. You take it into the channel in Houston, Texas. Well, what happens then? You got to pay for the storage. So you're losing money on top of money no matter where you go. I don't know what the outcome of this is going to be, but there could be a massive disruption in oil production and all those things. So maybe in the end, it will end up to be bullish for oil, but it won't be bullish for the right reasons. Once we see the economy come on, we see demand come back, then maybe they can save some of the oil patch. It's going to be really touch and go. As I've been talking about for the past several weeks, is there is so many industries being crushed right now. I heard Neiman Marcus is filing bankruptcy, which is an old Texas company, retail company. Macy's is probably done. You can go down the retail list and these folks are going to be disappearing. That's why you see the activity in Amazon that you see. So I could do probably a 2-hour show tonight. I'm going to keep it down to the things that we normally talk about. We'll talk about the S&P. We'll talk about crude oil. We're going to take a look at interest rates because I think those are important too. So let's go to the charts and see what we can find out. Looking at the daily futures chart, you'll see back on 326 that our models went long, and we've been climbing this pattern all the way through, and I've been talking about this ABCX ABC zigzag pattern that is likely to unfold. I also talked about 3 days ago that we were nearing the top. Critical levels that we were watching was 2850 to 2920. What we're seeing here finally is the breakdown of the pattern. Now I talked about the issue of the negative cross, and now I'll show you where that happened. Right here on the day that they made the high, we got a negative cross of the 10 over the 40, and I also discussed that the 40 is in a downward mode yet, which suggests that the S&P is going to want to decline back to that level. Now our short-term model has a very sensitive trigger, and if we close under the 10-period moving average, this is likely to signal an exit on a short-term basis. But the pattern I've been discussing with you over the past several weeks is likely to unfold. So the pattern that I've been drawing is this ABC up. Very likely this has completed that pattern. Now we're going to see an ABC down. We could come down into around 2350 on this decline. Minimum possibilities is to test this low here, and there is some support at around 2630, which is also lining up with the 21 period moving average, which has a positive over on the left hand side here, a positive 0.92. And that 0.92, unless it bleeds off a lot in the next few days, suggests there's only a 40% probability for the S&P to decline below that 21 period moving average, which right now is 2634, but it is rising at 1% per day. The support is most likely between the 2634 and 2698 levels. Now we're currently trading 2794 and the overnight futures down about 0.5%. So what we're looking at is Thursday is likely to be a bottom. We started a rally Friday into Tuesday, and then another decline going down into next week. We're going to continue to get these economic shocks. Things that you didn't think could happen before will start to happen. On the weekly graph, we also have something that's substantial. This 10-period moving average is declining at 2%, which is a massive decline, suggesting we're going to see a move down into the support levels I just mentioned, 2698, 2650 rounding off. That will bring us back to the backside of this 200-week moving average, which should act as support temporarily. The other thing I want to point out here is that the PPMs are, you see these sharp declines in the first and second derivatives. You also see this PPM turning down. In fact, all of them are turning down, which tells you that this is completing a weekly cycle. In at roughly a 5-week cycle, we should see a minimum of 3 weeks down and then another up pattern, depending on how deep this correction goes, how deep this B wave goes. So this would be your A wave. We'll get a B wave down, and then there'll be a couple things to consider once we start this rally. One will be how much it rallies back towards this high here. If it only rallies back about 60%, then that tells us that the next leg down be into new lows. Considering we do get this correction to set up like I'm talking about, then this next rally will tell us everything we need to know for the next 3 months. Everything I've talked to you about, looking forward to June as we look in a rearview mirror and we can see all the carnage that's behind us and what this shutdown has caused in the economy. That may be the realities around that time, because we're looking at somewhere between 5 and 8 weeks minimum. It could stretch out a little bit further. I talked to you originally several weeks ago about this 12-week pattern. Well, we've got 5 of them done, so there's at least another 7 or 8 weeks. 3 weeks down and 5 up would be 8 weeks. So we'll see how this pattern unfolds, and we'll keep tracking it. But the PPMs are actually telling us that there's a correction coming, and it's not likely to make a new high from what we saw last week. Our short-term models are going to be very sensitive in this pattern. I wouldn't be surprised to see an exit somewhere in here in the next day or so. The way the futures are acting overnight, looks like we're becoming very vulnerable. We'll see how we come in the morning. but we're definitely going to see a correction from here. The fact that we couldn't follow through on Monday after Friday's activity tells you a lot about the character of this market. Spot market now will be 21.37, but crude oil has a very strange delivery mechanism in the future, especially when you go out, you see a premium, and a lot of it has to do with delivery and storage premiums for this contract. We saw the failure of the contract yesterday. In fact, let's take a look at that before we go forward. This is the failure that you saw right here. Now this contract, I believe, will trade until tomorrow, but the delivery process started today. It goes off early in the morning. You can see that this contract is trading at 141, so it went from the negative 40, it's back to 141. The delivery process is continuing, but you can see there isn't a lot of demand for this contract. We are seeing a slight positive, up 4.85%. 21.42 is the last trade in the June futures. This market is still in a massive downtrend. And I talked about the $17 level being support. This is going to be a similar support. The June crude contract appears that it is going to continue this downtrend, and should it get through $20, we'll have similar numbers that I talked about a few days ago, back to 17 and maybe as low as 14. We now know that there's virtually no demand. So these prices that are being put out there in the WTI, they're somewhat fictitious, because when you go to the real spot market, you can't get these prices. Markets are likely to trade between $17 and $23 at this point. Last market we'll look at tonight is the 10-year treasuries. This little wedge that's forming suggests we're going to move back into 0.85. I continue to believe that we'll go up and test that 0.85 level and ultimately be back 1%. Longer term, my expectations are for yields to start to move higher, and if they get out of control, the Fed's going to have a hard time holding them back no matter what they do in the marketplace. And as I've said before, this will be the sign of the next oh shit moment. 10-year treasuries move above 1%. I want to thank you again for watching. Keep those comments coming, folks. I really enjoy reading them. Whatever's on your mind's fine. I'm a thick-skinned guy who used to hang out in trading pits and fight with my best friends all day, and we all have opinions, and I love seeing them. So keep those comments coming. Always looking for ideas and things that we can talk about on the show. Thanks for watching. We'll talk to you tomorrow night.